there's a lot of people that want to work with us. They literally want to give us money. They're like, give us a bank account and we will wire you $5 million. And we're like, we don't have a bank account. We're on the blockchain. You have
Yeah.
to make a wallet.
Hello, everyone, and welcome to Colors of Web3 and Entrepreneurship. My name is Lum, your Web3 host. So today we are still in the Web3 world. For those of you who are new to the show, Colors of Web3 and Entrepreneurship is a show highlighting the journeys of builders and innovators in the Web3 and entrepreneurship. Some topics actually in Web3 may get technical, but we do our best to keep it accessible for most people. I am joined today by Martin de Rijke. He's the growth lead at Maple Finance. He's actually being in charge of the new product called Syrup. So, Martin, could you give a quick introduction about yourself?
For sure. Yeah, thank you for having me. It's really exciting to be here. And great to see what you're doing, in the space. So yeah, just Martin, working for Maple, and we recently launched Syrup, which I'm sure we'll get into today.
Awesome, cool. Yeah, actually, I think a lot of people may be wondering, how you got into Web3 or what you did before Web3. Maybe could you share with us a bit about your professional journey? Before, I guess you can choose whatever time frame you feel appropriate, leading up to the current time at Maple Finance.
For sure. Yeah, that's a great question. And yeah, my journey started back in high school. So I found out about Bitcoin actually through my grandmother, from all
Really,
people. Like
that's interesting.
she read it in the newspaper, like this magic internet money, and she knew that I was into investing. So she was like, "Hey, check this out. It looks pretty interesting." That was $200 at the time, so bought a couple and just started researching it and fell down the whole rabbit hole, and obviously, got super excited about it. And then, got into the Ethereum world in like 2017, experienced the whole bull market in New York. So the excitement in the space, and knew like this is gonna, change the world and everything in it. I was a little bit more bullish on timelines. I didn't expect it would take quite this long, but, stuck around and started working for Maple in 2022. And really the reason for joining Maple is because, I always thought like we were building a lot of infrastructure in crypto, and that's all great, right? It's all needed. But I also really believe that we need a couple of like really good mainstream applications that really, solve real world problems. And I think that's what Maple is doing. So we're really bringing, transparency to the financial world, and we can get into all the details later. But I was just really excited to join, like an application that actually, was like solving real problems that I perceived in the world. So that's why I wanted to join Maple, and luckily they also wanted to have me join. So I joined in 2022, in the marketing team initially, and then hopped over to the operations team, and now I'm kind of like overseeing a lot of our like commercial activity.
I see. Cool. Yeah, sounds like a lot of stuff. What did you do before you joined Maple? By the way, were you just trading, researching Bitcoin, or
Yeah,
uh,
yeah. So it was just personally investing and researching and just connecting with people in the space. I also had a Twitter account where I posted research on like DeFi protocols and things like that. Um, and then, professionally, I was actually working for a medical device company. So I was just, building like, basically running their operations.
I see. Cool, interesting. But I guess you found your true passion about Web3, right? That's why you
Yeah, yeah.
decided to make the
I
jump.
always wanted
Okay.
to hop over, but just wanted to, wait for the right opportunity, and, joined right before the crash. So that was good time.
I see. Yeah. So I think, but I mean, if you said you've been in Web3 since 2017, so I guess you have already experienced like two cycles already, right? Yeah.
Yeah.
See the up and down. Yeah. But I
Oh yeah.
think, yeah.
Yeah. It
And, and,
was
and
like the first one, the in 2018, like 2019, and like it really felt kind of dead, right? Like there were almost no projects. Like you had
mm,
MakerDAO and ETH Land back then was like Aave. Now, it was really there was almost nothing, right? It was really a pipe dream at that stage. But a couple people stuck around, and then you started, seeing more projects come up, and Binance, was like one of the earliest projects that really started taking off in 2019, the token at least. And then, it kind of like renewed the next cycle. So, and obviously after COVID, what happened with money printing,
yeah.
like kind of people started understanding, why you should invest in crypto.
Awesome. Yeah, that's a very exciting time. I remember back in 2017, 18, I attended some Web3 conference. I don't even remember the name of the conference. It was so long ago, but I think back then, everything was new. Everything was pretty exciting. But then, yeah, afterward, just like you said, right? I think there's one period, 1 or 2 years where I felt like the whole Web3 just went away, right, during the bear market, and then came back right during the bull market, and went away again, I think, and
For
now
sure.
back, yeah. So it's
Yeah, it
kind of
was
like the
actually funny. Like during my time in New York in 2017, went to this meetup, this crypto meetup, right? There was like all these crypto meetups every day. It was like the height of the bull market, like December 2017. And there was this one evening where we were at a meetup, and the price of Litecoin literally doubled in like a matter of hours. And obviously everybody had like big bags, So I just remember this feeling of just extreme joy, and like people were making hundreds of thousands of dollars just like in a couple hours. And that was kind of the moment I realized, okay, we might be approaching like bubble territory here because people are just so excited, and just everybody from like lawyers to people working in restaurants, to just like everybody was like attending these meetups and like sharing their incredible gains. So it was an exciting time, but also a time to
Mm,
take some chips off the table.
I bet. Yeah, well, fast forward to today, another bull market, maybe not. I'm not sure. Anyway, but yeah, it's certainly we've had a lot more development since then. Can you
For sure.
maybe share with us some of your personal hobby? What do you do for fun outside of work?
For sure, yeah. So I actually have a wife and two children.
Hmm.
So we actually just bought a house like a
Oh,
couple months ago, and we got
congratulations.
last week. Thank
Yeah.
you. So yeah, I just moved in, and so I'm mainly now just spending time with my family, and getting the house and getting and keeping the house in good shape.
Yeah, I bet. I mean, yeah, taking care of a house is pretty busy. I'm not sure if you're into like DIY or do-it-yourself stuff or not.
Oh yeah,
If you do, you do. Okay, then yeah, I guess it
I love
get
that
quite busy.
for sure. Like putting up lamps, like painting walls, like fixing
Yeah,
stuff. It's exciting.
yeah, exactly. I mean, it's like basically it's kind of like a second full-time job. I mean, depend on how involved you're into it, right? Yeah,
For sure. For sure.
awesome, awesome, cool. So yeah, without further ado, let's go ahead and maybe deep dive into your current company and your role at Hypo Finance and also at Syrup as well. Yeah, feel free to share any presentation or screen or website that you have.
For sure.
Mm,
100%. Yeah. So let me share. Let's start with Maple,
sure.
and then we can afterwards, dive more into Syrup. So this is just the application, right? So like the homepage. When as a lender you log into Maple. So as you can see, we have different products, different categories. So we have some RWA products. So like cash management is treasuries on chain, right? Just very simple. The T-bill pays about 5% or so. And then we also have over collateralized lending. So that's really the core of our product. Like those are the most successful products, and those are also the ones that are growing the fastest. And basically, what that is just simple over collateralized lending to institutions, and they obviously pay interest on those loans, and that interest is then paid back to lenders. And all of those loans are collateralized with digital assets. So, if we go to Blue Chip, which is the most conservative product, as you can see, you can see here all the loans, everything transparently available. You can see those are all loans that are backed by BTC. Under the mandate, we could also back them by ETH, but it's really BTC and ETH back lending.
I see. So who
And
would be the borrowers for these loans? Would you
yeah,
say
so
like
those are
financial?
all large, crypto institutions.
Hmm.
So, like the names that you would know, like large market makers, desks, trading firms, venture funds, things like that. So all companies that have, hundreds of millions in assets.
Okay. And blue chip secure lending, does that mean that it's a over collateralized lending?
Correct. Yeah.
Okay.
So for example, if we open this loan, the $10 million loan, you can see that the initial collateral level is 167%.
Hmm.
And the current is 164.8%. So those are loans that are, let's say 167% over collateralized with Bitcoin. I mean, the numbers can vary loan to loan, right? And obviously the collateral price will, go up or down. But to manage that, we have margin call levels and liquidation levels. So if the collateral value were to drop to 133%, we would send a margin call, right? So we would actively try to get more collateral from the borrower. Historically, borrowers have always cured those in a couple hours. But if they wouldn't, then, we would liquidate the collateral. Or, if it would drop even further to the liquidation level, this 111%, we would also liquidate.
I see. And who are the liquidators? Is it your company, or is there another third party who would actually do the liquidation?
Yeah, a great question. So that's all done internally. So we have a 24/7, 365 operations team that are always available to liquidate.
Interesting. Cool. And I saw that this particular loan here was issued in 2 months ago, roughly, right? April, 22nd.
Correct. Yeah, indeed. And then, as you can see, it's payment frequency 30 days, open term. So that means that, it's like an open term loan. So at any moment in time, we can call the loan, and then the borrower needs to repay it in 30 days. And that's the main differentiator, for example, between us and Aave, right? Because an Aave also does over collateralized loans, right?
Yeah.
There's a couple things. I mean, first of all, obviously, you cannot deposit BTC in Aave, right? Because BTC is not compatible with ETH. You could do wrap BTC, but it's slightly different asset, right?
That's true. Yeah.
But so we can take native BTC, but then the main benefit there is that we actually have open term loans, and that means that the interest rate is fixed, right? So on Aave, you have like a fluctuating yield, based upon the utilization rate, right? If there's like more capital, then the interest rate will drop, versus if there's more shortage of capital, like it will go up. But with us, that's actually slightly different. So because the loans are fixed rate, we are able to provide much more consistent return. And I can actually show you a quick article where we do that analysis.
So open term just mean that there's no fixed hand date, right? It's just the loan is just keep open.
Exactly. So the loan will just stay open, but we can call it at any time, right? And then the borrower needs to repay it within those 30 days. So that is the main benefit, is that you have the flexibility of short-term liquidity, right? But you do also have the benefit of a fixed interest rate. So if you do, and that's why you see with a lot of RWA protocols, they have, for example, Goldfinch, like they have very long-term loans, right? Like a year or more. But that's actually not beneficial if you're a lender, because if you need to lock in your capital for a year, that's a big cost of capital, right? Like maybe in 6 months you're actually going to need it for something, and then you don't have access to it. So that's with Maple. We always have those 30 days withdrawals, maximum time to liquidity. So within 30 days, we will service your liquidity, and many times it's actually faster. So historically, we have serviced it in 36 to 48 hours, because we obviously got a continuous influx of deposits as well. So, and here I actually have the article. So here you can see that where, for example, the period between 6th of March and April 30th, Aave at 10.3%, and we actually had 17% return.
Cool. 7% difference.
Good. Yeah. Exactly. 7% difference. And here you can also see, like that, like there's just a bunch of numbers in there. But here you can see growth since September 23 of $1 million, and you can see Aave went to let's call it 1050, and we went to let's call it 1070 or so. So it's a significant difference.
I see. Yeah.
So I can also link you the article for interested listeners.
Sure. Yeah, I can certainly. Yeah, I can share it later, and then I can make sure put it in the show description for the listener. Oh, and by the way, I think one question that a lot of the viewers may also be wondering is like, where does the yield come from?
Yeah, for sure. Yeah. So these are all loans, right? So there's institutions to get access to the USDC, they need to pay an interest rate. And the way that they generate the capital to pay those interest rates, because they actually have businesses, right? So those are just large crypto businesses that if they take a loan at, the 14.5%, they can actually generate higher returns in their business. So they might be able to generate 20 or 25% on that capital, and they only pay 14.5%. So they, generate 5 to 10% for themselves, and the rest they pay to us. So that's basically really it. So it's just like any other loan you would provide to a company, right? Like they use the funds to invest and generate higher returns.
I see. Yeah, that makes sense. Yeah, but then I guess for let's say for the 14 or the 17% that you guys the rates that you charge the big banks or big companies are, how was it derived? How was it calculated?
For sure. Yeah. So that is a little bit of the magic, right? In the sense of it's a free market, right? So these companies can go to different places for loans. So they come to us and maybe a couple other players, and then whoever gives them the best terms, like they will proceed with. Now I will say that there is not a lot of capital sources available in crypto. So we are one of the few lenders that is actually existent right now, especially on the institutional side. And because a lot of these players, they cannot just work with anybody, right? They have like AML rules, and they have operational rules, right? Like all the assets need to be in qualified custody. They actually review our operational procedures to make sure that we have proper cybersecurity and like all the other processes. So it is a cumbersome process, and often it takes a long time to get set up with these borrowers. So it is yeah. So and then they will basically just pay a rate where it makes sense for them to borrow and grow their business, right? Where they still earn like a good return on capital. And that's a little bit for us also, is like to feel like what that best interest rate is. However, we do have target rates, right? So the target rate of this pool is like between 11 and 13%. So you can see the last 30 days has been 11.4. And then we have the other pool, which is high yield secured. So this is a bit higher yielding. There you can see the rate has been, a bit over 19%. And the target rate is, 18 to 20%.
I see. Cool. Yeah, and most of the loan is always in USDC. Is it?
Correct. Yeah, so we do have a BTC, ETH, and Sol product as well. So, you can also lend those assets. However, most of our volumes right now are in USDC.
I see. I think I remember reading some time back about Maple Finance that I think Maple Finance was doing the unsecured loans. Is that
Correct.
product still available? Unsecured loans, as
No,
opposed to
that's
no.
So it's a great product for borrowers, right? Because they just get access to capital, and they don't have to post any collateral. However, for lenders, it's less ideal because the loans are unsecured, right? It's in the word. There's no security, like there's no collateral, securing these loans. So we have basically seen that there's just a lack of demand for these type of loans on the lender side. So we decided to purely focus on secured lending right now.
I see. Yeah, that makes sense. I guess lender was not willing to lend out money when there's no like collateral, right? Yeah, because
Exactly.
I guess in crypto there's a lot of the anonymous people are just anonymous, right? So I guess may heighten that somewhat. Okay, makes sense. High yield secure lending. So for I guess for companies who want to like get a loan from it, they need to do KYC, right, on your platform? Is that right?
Correct.
What is a typical process look like? Does they sign up, talk to, I don't know, one of your agent, get KYC, deposit money somewhere? Maybe you can explain that. Yeah, be curious.
For sure, 100%. That's a great question. So, so you would reach out, and then it's a very personal process, right? So we we have many meetings with those borrowers. So it's not a question of just putting in an application and you get your loan right away. We do an extensive due diligence on all of our borrowers. So they go through big questionnaires. We check them both on the KYC AML side. So that's more like on the risk side of is this like a trusted party? And then we also do credit underwriting, where we check all their financials, balance sheet, income statements, as well as their whole business strategy and business model. Like, is this actually a sound company? Like, are they actually going to be able to pay those interest rates, right? So we evaluate all of that, and then with all that together, we create a package and we create an interest rate, right? So we price the loan in comparison also to other counterparties, right? Because certain borrowers might, they might meet the bar, but they might require higher interest rates, right? And other borrowers maybe that are extremely high quality, they will pay slightly lower interest rates.
I see. So you kind of effectively like giving them a credit score of some kind, right?
Indeed.
When you look at the application. Okay. Makes sense.
Right.
And I guess that's interesting. Would that be something related to like, does that credit score be something like on chain? Maybe in the future they can use it somewhere else or not? Because I think I've heard about this topic quite somewhat, like having a credit score on chain. Because in real life we do have a credit score, right? And let's say when you buy a house, you probably need a loan, right? And then they check your credit score and then give you a loan and the APR depending on your credit score. But we don't have the same
Sure.
in Web3 yet.
Yeah. I think that's really interesting. It is probably like a year or two out or so, because it's really there has to come a certain standard that is going to get adopted by all parties. So we obviously there's a couple of players that are trying something like this, like Fedora, for example, and that like we also use their services, and it's an interesting product. But there's no universal standard yet that is widely adopted, and that you can really rely on at this stage. So like we still do a lot of the groundwork ourselves.
I see. Yeah, that makes sense. I guess we need some sort of a standard, right? Kind of like in the Web 2 world, or at least in America, where I used to live, I think they have like, for example, like the FICO score, and maybe there's a couple other company, Equifax, and usually like issue the consumer credit score, right? So people based on these company to evaluate, and then I think there's equivalent company also who does the same thing but for businesses, right? Like how reliable, and then also organization who does the same thing but for like countries, right? How reliable is this country when it comes to getting a loan or getting debt? So yeah, so I guess
Sure.
you're right. We need more standards.
Yeah. That's actually on a slight detergent there. Like that's actually a really good point, and I think that was Kyle Samaini, actually brought that up. And his point was like every problem is in crypto is like a standards problem fundamentally. And I think that's a really good way of thinking about it, because we can do a credit score, right? Like we can do our own credit score and publish it for everybody. But then another company is going to be like, oh, like how did you get to that, right? We cannot just rely on that because we don't know the system you used. And then they might just do their own credit score, and then you got a total mess where there's like hundreds of credit scores, right? So basically, what you need is like you need a standard that everybody adopts, and then you work with that, and that typically is just driven by a government organization or like a private association that works on behalf of like a whole consortium of companies, right? And that's something I've learned in medical devices, because there everything is standardized.
Yeah.
Like the way you put a screw in a device, like it's standardized, right? Like the way you measure output of like a certain light therapy device is standardized. Like everything is standardized in all these different documents. So I think that is definitely something that we're needing crypto. Is a lot more standards for things that everybody adopts. Similar to token standards, right? How we have token standards and everybody adopts those. I think that is really it's very boring, but it's very necessary for mainstream adoption.
Yeah, it's true. But I guess like you said, the tricky thing is like who's going to be the one like coming up with this standard, right? Like, let's say if you guys do it, but then another competitor may be like, oh, but we don't want to use your standard, right? Because you might be favoring something that we don't favor, things like that. Yeah, so it
Exactly.
need to be like a neutral third party who come up with a set of standards. Maybe Ethereum Foundation. Well, we don't know. Anyway, yeah, I guess that's something to look forward to in the future. Yeah, let's see.
For sure.
Cool. So explore lending pool. Yeah. So outside of this, I mean, this is the main product, right? From Maple.
Correct. Yeah. So this pool, just to very quickly go through this one. So
Sure.
this one is SOL backed. So this is high yield secured, and here we can also take other collateral assets. So it's not just BTC and ETH, but we can also take SOL and other assets, and then we can also stake that collateral. And the way and that's the reason that we can get to that. Let's say 20% target APY.
I see.
And then we also have a couple of corporate loans. So we have corporate loan USDC and corporate loan WETH. And this is really the main one that's interesting here is the WETH loan, because this is obviously lending ETH, right? And you can get, the third APY is like 6.7%. I mean, generally speaking, it's between 7 and 7.5% API on net API on ETH, which is obviously very, very attractive if you compare it to the staking rate.
Yeah, that's true. 45 days to withdraw. Okay. Full view. Nice. And these are also directed toward like big companies, big Web3 corporation as well.
Correct. Yeah. So this one in particular is to a publicly traded institution, like a top tier counterparty. So prospective lenders can also see that under NDA.
I see. Cool. So I guess they wouldn't know who it is that they getting the loan from until you like sign up for the platform and get an NDA, right? Process. Okay.
For sure. So
How,
I'm not able to mention here, but like under NDA, like we make that available to lenders.
I see. How long would you say like a sales cycle or the sales process for one company? How long would the sales cycle look like?
That's a good question. So on the borrower side, it's like typically a couple of weeks to a couple of months. On the lender side, it can be a couple hours up to a couple months. So really the institutional lenders, like we work with some like traditional finance, institutions, and they take a long time to make their decisions, right? Like they do extensive due diligence on Maple and the pools and the company and the employees and the processes. Like every single thing you imagine, they will turn upside down.
I bet, I have to look through the security, compliance, legal, maybe whatever other aspect they need, right? And then of course they need to check like your platform, your company. So I guess that'd be a good question for people to know, like how do you like secure the crypto? Like, do you hold it in a very, very secure environment or something?
For sure, yeah. So we hold it in qualified custody. So with like big custodians, folks like Anchorage and others.
I see. So you using their solution, right? To hold, it's like an enterprise wallet in a way.
Correct.
Okay.
Yeah. So it's officially called like qualified custody, meaning that there is actually standard for that, right? So they have to, they are regulated. Like Anchorage is an actual regulated, like a regulated institution. They actually have a banking license.
Yeah, that's true. Yeah, I'm sure they comply with a lot of the rules and laws. Yeah, I don't think I've heard that much about Anchorage, but I do know about like 5blocks and BitGo, though. The other big one. Yeah, they're very, very big in the whole space.
Yeah, and so Fireblocks is like is a bit different. It's not officially qualified custody. It's like like a multi-signature wallet essentially.
Yeah, MPC. Yeah,
an MPC. Yeah. And then you have BitGo. They are indeed the qualified custodian. So there you can really like hold your Bitcoin in like cold storage.
I see. So qualified custodian, would that mean that they is like custodial, right? In nature, like they hold your Bitcoin for you, and then but is there some insurance or something in the event the if something bad happened, like who would be responsible?
Indeed, yeah. So your balance is fully insured. So if they were to get hacked, so let's say BitGo were to get hacked,
Yeah,
then the full balance would be insured.
interesting. Wow, and I guess there's no limit for that. I mean,
Correct. Yeah, I mean, as far as I know, there's no limit, but I think it's all segregated, right? So like they don't put it in one gigantic wallet, right? They
yeah,
have a large number of cold storage wallets. So I think the likelihood of all of them getting hacked is essentially zero, because I don't think anybody has access to all those wallets. But yeah, like
that's
I'm
true.
not very into the detail of like how qualified custody works, but I know that
Mm.
it is regulated, and it is audited as well.
Yeah, that's true. I think there's also like extra layers of security. I mean, obviously they probably have the 2FA, but I think on top of that, maybe the YubiKey hardware, and then even like the Enclave, right? What is it called? Trusted Execution Environment, TE, right, as they call it, to make sure
For
all
sure.
of these like extra steps to ensure that like no hacker can easily access it. And then I think MPC is designed to ensure that you don't have like the whole private key in one piece. It's like sharding
Right.
into two different pieces, right? Yeah. So a lot of these technologies are pretty cool. Yeah.
For sure.
Nice. Cool. Yeah. So I know you guys are like launching a new product, right? Well, it's actually been launched already, right? Yeah.
For
From what
sure. Yeah. So we launched it the end of June. So let's quickly go
Sure.
through the syrup.
Yeah, because I bet like this is a pretty new, big, and pretty exciting product as well too that you guys just launched. So yeah, I'd like to
For
know about
sure.
more about.
Yeah. So syrup is basically the same as maple. So the same yield, the same borrowers, the same loans, the same strategy, really. But it's just a different product. And the difference is that Maple is really accessible to institutional investors, right? So accredited investors and high net worth individuals, family offices, larger funds. And Syrup is really accessible to everybody, so it's fully permissionless, exclusive of the US, right? I have to always caveat that, but
I
it's
see.
similar to other DeFi protocols, right? You connect your wallet and you use it. So you go to the website and you just connect your wallet, you make a deposit, you select how long you commit. Based upon that, you will earn drips, and drips is basically a point program. So there will also be an airdrop at the back end of it, and then you can see your portfolio. You can see all the drips that you've earned, and you can see the details of Syrup. This is still a very new application, right? So this is really the first iteration of it, and it's currently open in private access only. So we have only opened it up for a couple hundred initial signups, and we are going to open it up over the next couple of weeks, broader and broader, to the full community.
Cool. I see. So what sort of assets or token can people lend here?
USDC at this stage.
Okay.
USDC
Yeah.
only.
I see. USCC. And then the yield is maybe if you can go to the lend page or something. Just
Yeah, yeah,
curious what the yield would be. Okay. 18. Okay. 18% roughly.
yeah. It says 18.3% or so right now, and we're gonna open it up for Tether as well soon. So USDT. So that's going to be a big enabler, especially in Asia, right? Because there's a very large Tether holder base.
Yeah.
And then the other thing is that you also earn drips on top of this, right? So the 18.3% is just all real yield sourced from these loans. But on top of that, there's going to be an additional sweetener with the drip rewards.
What does it mean? Can you explain that? What does drip mean? Yeah.
Yeah, so a drip is basically a point. So it's basically a points program, just with a fancy name.
Aha, I see. Oh, so it's a points program. Okay.
Exactly.
I see. And is there something, I mean, that will be, coming out from this program, point program? Because
Yeah. Yeah, so we're gonna do an airdrop at the back end of it in the syrup token.
okay, I see. And syrup token is probably is it connected to Maple token somehow or no?
Yeah. So the Maple token will merge into the Syrup token. So it will basically be a conversion from MPL, so that's the Maple token, to Syrup, and it will be like a one-to-one conversion. So it's going to be a migration essentially. So we're not going to mint like any new tokens or things like that. I mean, we have a couple that we did a governance proposal last year that was approved, where there will be like a couple small mints, but like there will be no additional mints further than previously agreed to through the governance process.
I see. Cool. Makes sense. So I guess it'll be like some rebranding as well too, since you are
Correct.
changing the name token. Will you also change the name of company to Syrup Finance? Just curious.
Yeah. So it will be like maple syrup, right? So maple
Maple
is
syrup. Yeah,
syrup for permissionless.
I see. Yeah. Okay. Yeah, that makes sense. Maple syrup. Yeah, that's a good new name. So, yeah. But I guess this will probably take some time, right? It will not like happen because
For sure.
now you have a DAO, right? I believe like maybe a
Correct.
DAO, someone who govern. Yeah. So usually with DAO, I think the process will take a bit longer. But cool, nice. So I guess people can look forward to lend their stable coins in here, right? And then get the drips to earn syrup. Is that right? Future syrup, yeah.
Correct.
Potential.
Correct.
Okay.
Correct. And I can also send you an access code for that you can that you can put in the description in
Oh,
case
sure. Yeah.
folks are interested.
Yeah, for sure. Yeah, I'll make sure to put that in the show description later on as well too. That'd be awesome.
Perfect.
Yeah. I see. So, but I guess the objective is here to give access to more individual consumer, right? To be to
Correct.
participate in
Yeah.
lending.
So it's really like we want to make institutional yield unlocked for everybody, and then everybody with a little caveat excluding US.
Yeah,
Basically everybody.
I see. No, I totally understand. US is just there's a lot of regulatory hurdle there, so I guess most
Exactly.
companies are trying to avoid that, right? Explicitly, you don't want to get in trouble with SEC, one reason or another.
Exactly.
And what chain is this on? What chain will this be on?
So right now it's just on Ethereum, but it will be on other chains as well.
Okay, Ethereum, yeah, one of the most secure chain. So it's good.
Exactly.
Good to know. Yeah, actually, I like to just wondering about the people behind the company as well. Maple Finance or
Sure.
Maple Syrup. Can you maybe share with us how many people actually work at Maple Finance?
Yeah, so it's about like 30, 35 people at the moment. We have grown pretty significantly over the past couple of weeks. So I think we've hired probably like 10 people or so in the past couple of weeks. So really building out, especially our commercial team, like legal, operations, capital markets, marketing. We are growing. I think we have doubled last quarter, maybe even more Q2 from where we're in Q1. And now the goal is again to almost double this quarter as well, including syrup. So right now we're about like 250 million TVL. So we want to grow that to about 500. So that's really the
Nice.
target. And most people have a background in traditional finance. So they've worked for like investment banks, credit funds, just normal banks, things like that. And they've really seen like what the problem is in traditional finance, right? Like it's super slow, not transparent, extremely inefficient. It's very local by nature, right? So it's very difficult to do global business. It's very siloed. So there's a lot of issues. But at the same time, there's obviously a lot of things that are very good as well, right? So there are very good, credit underwriting standards and very good, practices and processes that have been built up over the centuries, really, in how to do banking, how to underwrite loans, how to maintain financials and all those things. So we like to use all those good things, right? Like the real diligence and systematic approach and the rich history of traditional finance and the robustness of that, and really combine it with all the new tech and things that are enabled by Web3, which is mainly the transparency, right? So all of these loans are fully on chain, all the borrowers are on chain, you can see the performance of all these loans. All the assets are on chain, right? They're all held in qualified custody and like different
Yeah.
wallet addresses, all segregated. All the interest payments are on chain. Like all the accounting is done on chain, so we don't need big teams in spreadsheets, right? Like it's all, the logic is all automated. It's global, so anybody from all over the world, you know, can really connect a wallet. Like after, you know, if they meet the criteria, and they can make a deposit, or you know, they can borrow. So it's global in nature. So you have all the benefits of on chain with all the benefits of traditional finance, and those two things really get merged in one. And that's both the identity of the team. That's what everybody's driven for. Aligned with that, that's also the mission of MapleServe.
Awesome. Cool. Yeah. So I think, I mean, it sounds like a lot of things for 35 people doing. And you said like, I guess you would belong to the commercial team, right?
Yes, yeah, that's correct.
I see. And how
So
many would you
I'm
say?
not really in
Oh,
the specific team. So I'm like kind of overseeing marketing, overseeing like business operations, and then, you know, doing a lot in like our lender. I'm you know, lender facing as well. Do a lot of like customer service, like lender calls, diligence calls, things like that.
I see. Cool, cool. And how many people would you say in the engineering or the technical team?
I think like it's probably about 50-50. So like
Okay.
half are like engineers, designers, and then the other half are like commercial.
Cool, cool. Yeah. And your team is fully remote. Where
Yes.
where where, where are most people based? Would you say?
Yeah. So it's really like Europe and North America heavy. So most
Hmm.
people are like either in the US, Canada, or in you know, mainland Europe, or UK.
I see. Yeah, when you said Europe, actually, it just reminded me of something. So I know that the new MiCA, I forgot what it stands for, but I'm sure you know what it is,
Right.
right? MiCA. I think it just went into effect, right, recently. If correct me if I'm wrong. Yeah.
For
So I
sure.
mean, how was that actually impact? Maybe if you can explain to the viewers first what MiCA is, like briefly, and then like, how was that impact, like things going forward in crypto.
For sure. So I'm not a legal expert, but you know, what I do know is that MiCA is like a new, you know, regulation for cryptocurrencies in the European Union, and it basically sets a standard for different type of tokens. So you know, you have like utility tokens. I believe there's three types, like utility, and then like stable coins.
Hmm.
And that's basically a framework, you know, under the MiCA that you can use to, you know, bucket your token, right? So, and that's based upon how you set certain things up. So, you know, it's basically already in the name, right? But if you have a stablecoin token, I don't know if it's like a real world asset token. It could be even
Hmm.
broader than stablecoin, but I think it's just stablecoin. And yeah, you know, you can basically then follow these guidelines, right? Talking about standards earlier, you can follow those
Yeah.
guidelines, and then you can issue your token under that regime. So I do think there's like lawyers involved and registrations and things like that. So I don't think it's as easy as just pressing a button and registering, but it is, you know, certainly good for um for adoption ultimately. Like I don't, you know, but yeah, I'm not an expert in like all the different businesses, and there's probably for some people it's good, some people it's bad, but I think overall we are traveling in the right direction, and it shows that, you know, regulators are taking it seriously.
I see. Cool. Yeah, I mean I do hope so too. I'm not very sure. So I think the one of the thing I've read about MiCA is that they will I think effectively ban, is it ban or like forbid people from using USDT, which is Tether in Europe. So I'm not exactly sure how that will work. Like, and then what will people use? I guess some other stable coin, right?
Yeah, I haven't seen that personally, but you know, it's possible that USDT doesn't meet, you know, the requirements of MiCA.
Yeah, because I think I was reading the newspaper article about like they have to maybe like 30% or 60% of the money need to be held in like European banks. But like
Uh,
you know what I mean, like 30% European banks, but it's probably gonna be a pretty big hurdle, right? So I feel like yeah, that's probably not gonna, a lot of the stablecoin probably not gonna be able to meet that, because
for
I
sure.
feel like
Yeah,
30% is pretty big hurdle. But anyway, I mean, but like you said, I do hope that there will be more good points coming out of this, versus the negative points. But yeah, so anyway, that was just what I've been reading.
for sure.
Only.
Yeah, it's a good point. It also makes sense, right? Like Europe wants to protect It's
The
currency, right? Like
the
Europe,
consumer. Oh, and the euro. Yeah, true.
exactly. So I think what they really want is a digital euro issued by either themselves or European banks.
So like CBDC.
Yeah,
Hmm.
either CBCC that they issue or or like a stable coin issued by the big European banks. I think in the US they're a little bit more innovation leaning, and they encourage a bit more private stable coins, because we obviously got a certain bill introduced to like even ban the CBDC, which in the US. So I think there's quite some support for that in the US.
Yeah, for sure. Yeah. But I guess I would not be surprised if some European bank, like you said, would come out with CBDC sometime in the future, because it feels like it's. I guess I mean if you're already making the laws, right, the regulation, then I don't see anything that would be like stopping them from issuing a digital euro that would probably help to prop up the euro as well. Yeah, value of euro. Yeah, because I guess isn't the goal of European unions to make the euro one of it. I'm just guessing here, like make the euro stronger, right, versus the US dollar, because it would be good for the European citizen, right, living there if the euro is stronger.
For
Just,
sure.
hmm.
It's gonna make our backs go up in Europe.
Yeah, I bet. So,
Yeah,
well, yeah, coming back to your company, I'm curious, like with 35 people and a lot of very big companies, wanting to work with you guys, and I'm curious, what are the main challenges would you say facing like maple syrup?
yeah. So it's really an execution challenge, right? It's there's only so many hours in the day, and there's like so many things to do. So it's really like, what are the things you prioritize? How do you organize the team? Like, how do you all drive to the same results? And I think that's really the nut that we're trying to crack, because it's very clear where we're going, right? It's very clear what we want. We just need to make sure that we take all the right actions to get there. And I think that's really what we're focused on. So that's also why we like to stay lean, because as soon as you get to hundreds of people, like it becomes
Yeah,
more and more difficult to get everybody driving to the same outcomes. And it's harder and harder to really make sure that everybody goes as hard as possible after those objectives. So I think that's really what we're trying to do. And obviously, like, all the projects and things are really laid out for us. We want to scale, right? That's really the key word. We want to grow, grow, grow. We want to get more partnerships, more lenders, more borrowers, more depositors, more distribution, more exposure. Like, those are really the things that we're chasing.
cool, awesome. Yeah, so I guess you probably need more people, right? With grow, I'm pretty sure like every company would need more people too. Yeah, I feel like 35 is probably, yeah. Cool. Just wondering, let me looking into the future here. How do you see maybe some of the lending markets will evolve in the next few years in general?
That's a great question. So I think that like right now there's still a big disconnect between crypto lending and like real world lending, let's call it. And the reason is because in crypto lending you have stable coins, right?
Yeah,
And there's just a big shortage of stable coins. Like, there's a big shortage of dollars in the system. Like, everybody's trying to get dollars, right? Like, every application,
yeah,
everybody's trying to get stable coins to grow. That's why there's just kind of like a mismatch in supply and demand, and that creates these very high interest rates, right? Like, getting 20% in lending on an over collateralized basis with assets that are tradable 24/7, 365, that are super liquid. I mean, that is an amazing deal, right? Like, if
mm,
you would, if you would, let's say you have Tesla stock, right, and you can borrow against it. I mean, that loan is priced at, like, I don't know exactly, but it's like 6, 7, 8%, right?
yeah,
While I mean, Bitcoin is the same as Tesla stock, right? It's just, it's super liquid as well. I mean, you could argue it's even better because Tesla doesn't trade in the weekends, right? But
that's
Bitcoin
true. Yep.
does.
Yeah.
So I think, so if you have a big move in dollars over the weekend, like, what are you going to do, right? Are you going to sell your Tesla stock? I mean, that's difficult. So
Mm,
I think yeah, it's just it's a very huge product. And I think that over time, there's going to be more traditional capital that's going to go on chain. and that is gonna, mint those stable coins and access these lending products. And then over time, I think those rates are just gonna kind of like converge.
Yeah, I think that makes sense actually what you said, because I guess when big companies, whether Web2 or not, right, and then if they see there's this really good yield on chain, but of course they want to make sure it's secure and it's not hacked, it's not a scam, right? And then but they can actually see that these yields are much bigger. Then I guess eventually we do see that they're really reaching an equilibrium, right, of the
Exactly.
lending rate. Yeah, eventually. Yeah, I think that'd be quite. Yeah, that's a very good prediction. So I guess what that would mean is that would you think that the current rate would go down over time then, because there's more people now like will come into the future driving the rate down. Is that pretty
Yeah.
fair
So
assessment?
yeah. So like all things equal, it would come down. Obviously, if interest rates would go up in traditional markets, then it could also go up. But
Hmm.
it will basically converge with traditional markets, like whatever traditional markets are at that particular moment in time. And I think like that's when we have done like a really good job, right? So typically, if you see new products that are like typically if you see new innovations, like let's say the electric car by Tesla, the price was
Yeah.
actually much higher initially than traditional cars, and the quality was not necessarily much better, right? Like the first Tesla was not necessarily much better back then than like a BMW or whatever. But over time, those Tesla cars obviously became better with scale. And I think that's really the unique thing that Maple brings to the table. Is like our product is actually better right now than traditional, because of all the things that we discussed. Wow, it is an innovation as well. So I think that is really the cool part of it. And that's also why I think we're scaling so fast. And we see that all the time. Like there's a lot of people that want to work with us. They literally want to give us money. They're like, give us a bank account and we will wire you $5 million. And we're like, we don't have a bank account. Like we're on the blockchain. You have
Yeah.
to make a wallet. And they're like, a wallet? What is that? Like I have a wallet in my pocket, but and then to
Yeah.
teach them, and they have to get comfortable with. So typically, it's not even the due diligence on us. Well, that's important too, right? Like they check everything, but it's also, how do you even get a wallet, right? And they have to engage with like Fireblocks, or they, if they want qualify, they have to engage with like somebody else,
Anchorage. Yeah.
um, Anchorage, or
Yeah.
other ones. So I think it's really that learning curve, and that it's really the gates are not yet open, right? Like we always say, like the gates are open, all the institutions are coming, like they want to come, but they're like hammering on the gates, but the gates are still a little bit closed. Like there's little gates open, but the big gates are still closed. So
Yeah.
and that's something we need to solve as an industry, and we are doing that, right? Like every day we're making progress.
Yeah, for sure. I think what you said basically really hit it right on there, because as Web2 company and even big institution, when they see opportunity, but of course they still want to be like hesitating. They want to make sure that, hey, is this easy to use? I mean, we probably need to put a lot of the abstraction in, right? Because like you said, even the wallet experience is probably going to be quite difficult for them. Like how are they going to manage it? Maybe if they work with Anchorage, of course it will take some even learning for them to learn how to use like Anchorage platform and how to work with it. Yeah, so there's pretty much a huge learning curve over there. But like you said, yeah, we are making improvement day after day. I see more and more like things will be abstracted in the future, making it so easy for both businesses and consumer to use Web3 product in the future.
100%.
Yeah, yeah. So
Pretty line.
looking forward that day. Anyway, just two more questions here from my side.
Sure.
One is that I think since you also came from Web2 to Web3, I think you've totally qualified to answer this. Do you have any advice for people who want to break into Web3 from Web2?
For sure. That's a great question. And something I'm actually really passionate about. So I would say just learn as much as you can, and really like never underestimate your own knowledge. So like if you just spend the raw hours in Web3 and you just literally follow people on Twitter, you listen to podcasts, you read white papers, you go through websites, you actually use products, right? Like just do all that stuff, and you're gonna have a huge head start over anybody else. And during an interview, people will just literally ask you those questions, right? And if you know those things and you're really passionate about Web3, like you're gonna get a job. Like it's as simple as that. So I think, yeah, just really that. So just spend a couple 100 hours and then just start applying for jobs you're passionate about in companies or protocols that you really believe in. I think it's as simple as that.
Awesome. Yeah, I think what you said is basically right on the point there. I feel like Web3, for me at least, I mean, it took me at least like a couple months to actually kind of get onboarded and understand a lot of the Web3 nuances and how things work, even like wallet, key management, and then started playing with DeFi, NFT, and just learning one thing or another. And then I got more into building, just building and learning and maybe showing your work, right? And maybe share some example during interviews, just like you said, because those will certainly help people to demonstrate their skill in Web3. I guess it's like quite hard to like evaluate Web3 native, but then after talking to someone for quite some time, you can quite somewhat understand, right, whether this person is actually like a real Web3 native or maybe he just like he thinks he know, but he doesn't actually know, right? Yeah, so there's usually some way to tell. Yeah.
Sure. Whether he's a degen or a new gen.
Yeah, exactly. That too. Awesome. And then, final question. Where can people follow you and your company? If you share any public handles or username, if you want, you can follow you.
For sure. Maple.finance, syrup.fi, then also, Twitter, same handles. And then my personal on Twitter is Fundonomics.
Awesome. Cool. Yeah, I'll make sure to put all those links and handle names in the show note here so people who watch the show can actually go take a look at your protocol and yourself. Awesome.
Perfect.
It's been really great chatting about maple and syrup, and yeah, it actually sounds really sweet. Yeah, make me hungry right now, actually, thinking about that. Anyway, yeah, but thank you for being on the show today. It's been really fun. I hope we can help to onboard a lot more big companies and corporations into Web3 through maple
For sure.
and syrup.
Yeah, thank you for having me on. It was really great to be here and really nice conversation.
Awesome. Cool. Thank you. And we're back to my studio. What do you guys think about this episode with Martin, grow lead at Maple Finance? Did you guys learn something new about the DeFi world today? If you didn't, please give a comment below and let us know what you learned. So now, with the launch of Syrup Finance, individual user can also access institutional yield on-chain. For the next episode, we'll be talking to Duncan. He's the co-founder and director of the Abelian Foundation. Abelian is the world's first post-quantum privacy preserving blockchain. If you enjoyed this episode, please give a like and subscribe. It means a lot to me. Thank you for watching and see you next time.